Hello and welcome to today's daily educational video here at Forex.Academy. I am your host, of course, Robert Blackwell, and have the pleasure to walk you through today's daily education. So just before we go through the video, please do consult the disclaimer. There is risk inherent trading these financial markets, so do be aware of the risks involved. And the content of today's particular webinar will be trading Forex markets. So why, of course, do we look to trade Forex markets? Why are they the most common or popular markets to trade? And why perhaps do they offer the most opportunity across these different asset classes? Well, one of the main aspects of Forex trading is the volume. There is, of course, a lot of volume in currency trading. If you think of the amount or unquantifiable amount of foreign exchange transactions moving between nations or regions, or of course financial institutions, there is a huge amount of currency flow through the world. So that's a huge reason why there's a lot of volume, of course, in trading Forex. If we look across these different asset classes, they all move according to news flow. So of course, in actually looking to price these Forex markets or a currency against another pair, all the news flow is reflected in that price. So if we think of any news, perhaps economic data like CPI, unemployment, these all have an effect on the nation's currency and are quite volatile as such. So that leads us on to discuss, obviously, the opportunity as traders. The fact that we like to trade Forex is because, well, they're the most volatile of assets and they provide us potentially with the most opportunity, I would argue, most certainly in the short term, as they react to news each and every day. What we have here in terms of studying the Forex markets here at Forex.Academy is, of course, with our education, we have a Forex activity matrix. And one of the reasons for this is, of course, the main construct or reasons behind trading Forex markets is because you are looking to trade strength versus weakness. So effectively what you're looking to do is trade a one leg of strength against another weakness. So if you're looking to buy the euro against the dollar, you're looking for euro strength, but you're also looking for dollar weakness. Okay, so that is the main construct, the main focus of Forex trading. So here we have our Forex activity matrix for the week. Now this table just represents the strength or weakness across the majors, of course, in the Forex markets. So with this week, the weekly delta change, we can see sticking out like a sore thumb there, we see two markets in particular, US dollar strength and New Zealand dollar weakness. Okay, so they're the two main market movers, I suppose, this week. And that gives us an indication to actually looking for opportunity. We can see if we even consult the euro there, we see a little, I suppose, ambivalence between some strength, some weakness. There's not a lot of, I suppose, huge volatility in the movement. Whilst if we look at the US dollar, we see the dollar is strong against the euro with an increase of 1.58% this week. Against sterling, we see it increase or appreciate 2.78% in one particular week. So that level of opportunity is very significant. And again, if we look across the actual table here, if we are to choose to trade some of these assets in the Forex markets, well, if I want to get long a market or look to buy one of these currencies, of course, I'm going to look for the most opportunistic or strong market out there. So at this particular moment in time, sentiment is showing us that we have a very strong dollar. Of course, again, to look at the weak side of the market, if I'm actually looking to sell or short some of these markets, I'm looking for weakness. And again, with the sentiment, you can see that the New Zealand dollar is particularly weak against all of the majors this week. Particularly there, we see it depreciate 3.24% in 1 week against the Swiss franc. So that is a very, very big move indeed. That would indicate to me that there's, of course, some Swiss franc strength, and particularly that there's a lot of weakness there in the New Zealand dollar. So let's observe some of these trades, of course, and actually looking at how we might look to trade this in the markets. Here we have our JFX platform, of course. And I'd just like to look at a few markets just to describe how we might look for opportunities. Again, what we defined as strength and weakness there across the majors this week was dollar strength and New Zealand dollar weakness. So, of course, the first thing we might look to do is just to see how this strength is playing out in the markets. If we consult one particular trade, we have the euro US dollar. Again, we're looking at the daily price action here. We can see that it is breaking this level here, and the week's trading is trading to the downside. So these are all daily candlesticks. You can see how it is traded during the course of this week, over the last 5 days, more specifically trading very, very sharply to the downside. So that's against the euro. It tells us that the dollar is most very strong against the euro. Then we'd look to actually observe this dollar move across other assets. So let's forget about euro for a moment. We'll move across to sterling. And again, instead of selecting daily candlesticks, we'll choose a weekly candlestick just to see how it has reacted this week. And there you can see that that is very significant in terms of showing us a level of strength in the dollar. So again, because we're trading pound dollar in this specific market here, when this market is moving to the downside, well, that is showing dollar strength here again, just like our euro. So again, we see a little technical break here just at this channel, and that is very significant in terms of judging and observing this price action across the market. So already we're starting to build a picture of dollar strength across these assets. And then what we can look to do again is look for opportunity in the New Zealand dollar, considering we've seen it show some very strong weakness. We've seen if we very strong weakness this week. What we can see there is the market has broken the resistance level here just by observing the weekly candle against the euro. So that would give us a little more conviction that there's going to be a continuation here. And then how do we look to trade strength versus weakness? This is really the best question we can ask. How do we look to embroider these opportunities for the best possible trade setup? And again, probability trading with technical analysis is looking to stack the odds in your favor. So the very easy way to answer that is, of course, well, we know the dollar is strong. We know the New Zealand dollar is particularly weak. Why not trade the New Zealand US dollar? And this is exactly what we see in front here. We have the New Zealand dollar. Specifically, what we'll do, we've seen our Forex table. We know that the New Zealand dollar is weak at the moment. We know that the US dollar is strong at the moment. We know that this currency pair is quoted as such, where the New Zealand dollar is the first leg. So this is exactly what we are looking for. This is exactly the trade we are looking for as Forex traders. We're looking to follow downside movement, and this is what we have at this level here. This is the week, so we have 1, 2, 3, 4, and 5 candlesticks leading to obviously yesterday and today's price action. So a full week there of 7 days. That is our week, and this is the trade to the downside. Very, very weak market at the moment. On the technical level, you can see it's broken resistance, and it's all adding up. All of our analysis with a Forex activity matrix indicates dollar strength this week. It indicates New Zealand weakness. The technical analysis certainly suggests that across the broad range of Forex markets, but in particular, we can look for the best trading opportunity by combining our strength versus weakness ideas and actually looking to trade that market itself. And this is, of course, the market we'll be looking to trade. Again, we'll just remove our analysis here. And if we just zoom in on the weekly price action, we can see that this long-term level of price consolidation here on the technical side has failed, and again is looking to move to the downside. So we've literally broken this level, call it level B here with a break, and then we're looking to trade this to the downside. So again, if we're looking to speculate, we could have a profit target of around here, given it's our next level of consolidation. So that's how we look to trade these markets, guys. Again, all we've simply done there is observe US dollar strength, is observe New Zealand dollar weakness, and then we looked across the different assets to see how they're performing individually, whilst looking at the particular Forex market for New Zealand dollar itself, trying to get on that trend and trade it effectively. So I do hope you bring that in, start to embroider that into your trading, looking for strength as weakness, and weakness as Forex traders. It will, of course, provide you with the best opportunities when trading Forex markets. So that brings us to the end of our daily educational video. Thank you very much for joining us here at Forex Academy. We'll see you next time. Bye for now.